the vision is this, but that sounds nice as a company. What does that sound like for me, the investor? What is your vision for me?
First, I want to stress on the difference between the money market and the special fund. By consistency, we don't mean a flat line. We don't need a flat line. If I may look, and I would love you to look at the back of our fact sheet.
Okay. So let's go through this actual paper. This is the fact sheet. So now we are going to fast forward to June. When is today? July 8th. I guess you are telling me. July 8th, 2025.
Yes.
Okay. So explain to me this document that I'm holding right now. This is the fact sheet.
Yes.
So now let's walk me through those things. Me, you've got that one. I'll check on my phone.
Oh, okay.
Because you also email it.
Oh, okay. I'll take you through the fact sheet and what is there contained in the fact sheet. So having discussed a lot about FIDA and its inception, I'll just highlight on a few. The first part is fund introduction, which talks about Oak Special Fund being regulated by the Capital Markets Authority and also being under FIDA Investment Bank, which is also a licensed, fully fledged investment bank under the Capital Markets Authority. The second part is the fund description,
yes,
which says what is Oak. And allow me to read for this.
Okay.
Oak is a special fund with a diverse trading model focusing on optimizing returns for clients regardless of market conditions while minimizing risks. The fund uses stringent risk management techniques to minimize downside risks. We have a dedicated professionals with a wealth of experience. What does this mean? Oak Special Fund is what we call a leveraged asset allocation fund.
Not understood the thing that you said there, like
yes. By a leveraged asset allocation fund, first we are saying that part of the assets is the money that we have,
yes,
is magnified to do more than it should be. Leverage is a lever. Just the way you can use in opening the nuts of a car or something. So it's something that makes you be able to do more than you should do in a normal circumstances.
Is this a high? My next question was going to be then, what's the difference with a money market fund, an MMF, and a special fund? A special fund, from what I've heard you say, is riskier because they're doing a few more things to make it gain higher returns. So not only is it more risky, it also means it should give you better returns, or they're aiming to get you better returns than what a money market can do.
Okay, I'll say yes and no. First, I want to stress on the difference between the money market and the special fund. A special fund can be more experimental than the money market fund. Money market fund, you have 1 million, you stick with 1 million, you invest 1 million, and you do trades worth 1 million. In a special fund, because of leverage, you can have 1 million, take 100,000 and place it somewhere where you are given capacity to do, let's say, 100 times more. So you're using 100,000 to do trades of 10 million Kenya shillings.
Bro, why does this sound like Forex trading? Is it?
The same concept is used.
Okay.
Part of the special fund even invest in what you call Forex trading, a small part.
Okay.
There are other aspects that we use for leverage. One example is whereby you use options, whereby you pay a small premium. But once you pay a small premium, the downside is losing your premium, but the upside can be magnified to even above your premium and plus more.
Okay.
So that is why I'm using the word leverage.
I get it.
Yeah. Also, there are various trades that we are able to do with counterparties, whereby they allow you to participate in a trade by just providing a margin. By providing a margin, it's only the security they need.
Okay.
But they give you a trade which is 10 times more than what you are able to do. That is not available in the money market.
I get it.
Moving to the risk. Is it riskier? Naturally, they should be riskier than money markets. I'll say in all ways they should be riskier than money markets. But as I said in another video, not all special funds are the same.
I get it.
Let's not take it like by like. There are some that are very conservative, and obviously you expect the returns are also a bit conservative, who are looking at consistent returns, maybe average returns, and rebalancing their portfolio, not to have spikes and troughs. There are people who are doing that. While others are focusing on maybe above market returns, which might be slightly more risky. But the question should be, what is their risk management strategy? Rather than are they risky or not? It's not an extreme level of yes and no. It's where are they on the spectrum? And what are they doing to manage this risk? Because risks are always there.
So what is the vision for Oak Special Fund that you can share?
The vision
to your investor.
The vision is actually to be the leading special fund in East and Central Africa, and probably to have even investors from across the globe coming into Kenya. That is what we are looking at.
So is it legal for them to currently come into Kenya?
Yes, it's unless for countries that are slightly restricted into investing in foreign places, they are allowed.
I get it.
Yes.
Okay. Hey, there's a lot you've said. So again, the vision is this, but that sounds nice as a company. What does that sound like for me, the investor? What is your vision for me?
Our vision is actually to offer consistent, stable returns over a long term.
Wow.
While building wealth for our clients.
Okay. This is the first time I've heard this. This is so good. Yeah. So the vision of Oak Special Fund is not, and stop me if I'm wrong, is not to chase the maximum return in an essence. It's almost like you're telling me, if the opportunity to make 40% is there, as my thing is I want every single month to give you a certain amount so that I can hit what I've promised you to give every month.
I want first to remove the word promise.
Okay. You haven't promised.
Because from the regulatory point of view, we are not allowed to promise.
You're not allowed to use that word?
Yes. Okay. We can only target returns. Once we target returns, we hope and we strive to reach them.
What is the targeted return that you are aiming for?
We are aiming for 20% after fees as our target return per annum.
20% is if I gave you $1 million shillings for a whole year, and you hit that 20%, I decide after the year I'm out, I am taking 1.2.
Yes.
You've already removed your
management fees and any other fees accrued to you. That is what you are looking at.
Okay.
Yes.
But I just explained to me this thing of consistent returns over a long period of time. I really like that, but I just want you to explain it.
What we are looking and striving for is for people to be comfortable to do their financial planning. Let me give an example. You want to buy land in let me call it
Karen
or Runda. So there are plots. Karen. I say you are very specific. But Karen, I've seen land being sold at 25 to 35 million for quarters and to half acres. Yeah. So maybe that's what you are striving for.
Yeah.
So you want to raise 30 million in the next 2.5 years. That's what you want to strive and raise. You want to plan. So you have said that you are going to put a certain amount, let's say 1 million every month. If you are striving to put 1 million every month, we want you to be somehow comfortable to be able to project what you expect by the end of the period. As much as it will not be exact, at least you can project. Because if we have returns of 60% this month, then negative 20 next month. It's so inconsistent that you cannot be able to include the earnings for your projections.
I get it.
So with consistency, it will build trust, it will bring confidence, and you're able to plan.
And let me just ask this as a question. You can't just jump into any opportunity at any time. For example, if I tell you, yo, ball, in the crypto world, tukona pie. Pie is about to shoot up. Yes. And that thing will give you 120%. Yes. Forget this 20 that you're after. Or, for example, I say something like, Iran went to war, oil is about to shoot up. Are you allowed to just move to any opportunity, or how does that work?
Okay. There are various levels that dictate on what you can invest and what you cannot invest in. We start from the basics. The basics involve application to Capital Markets Authority. We created a document called an information memorandum. And on the information memorandum, it states and basically dictates that these are the asset classes and the assets that we can trade. So you said 1, 2, 3, 4, 5, 6. These are the assets. From that level, even before proceeding, like right now, as at now, crypto is not an allowed assets based on Capital Markets Authority.
So it doesn't matter what, it is illegal for you to enter crypto.
They've clearly said it's not illegal, but it's not allowed. And a licensed entity cannot trade on unlicensed products.
I get it.
So as at now, but I know this will change soon, we cannot invest in crypto. That is number one. Number two, from the asset classes that we have been allowed, we move to the next step. There is asset allocation, which first is done by a dealers committee. So the dealing committee sits and says, this is our target, this is what you need to place in 1, 2, 3, 4, 5, and we agree. If we need any new assets, we make a proposal, and we also present that asset allocation to who? To another committee called the investment committee.
Wow.
The investment committee involves a chair who is outside the organization, who comes to sit to have a third eye onto what you are doing, and several people in the industry who are non-partisan or executive in oak, but understand the markets. And we tell them, this is the plan for the month. We are doing this asset allocation, and we need to add 1, 2, 3, 4. Let me give a good example. Assuming we have decided we want to participate in a commercial paper.
Yes.
And you know, commercial papers and corporate bonds have been good and bad at the same time.
And I know guys may not understand commercial paper.
Yes.
It's like, for example, when a company is trying to raise capital.
Yes.
Let's say I'm supplying, Richie is a supplier of we're switching this today at Social House.
Yes.
I'm a supplier of cake to them. And normally they ask for 9 cakes. And then they come and tell me, yes, guys are having a conference and we're going to have 10,000 people coming. I don't have the capital to produce that kind of cake. So I come to Faida Investment Bank and I ask for, or Oak Special Fund, and I ask for that capital. Is that a capital paper there?
Okay. The concept is near, but not fully, because commercial papers have to be documented and listed, and actually they have to go through an approval process by CMA, Capital Markets Authority. Okay. So it can be structured, and you create a commercial paper saying that based on these cash flows, a company XYZ wants to borrow, let's say, 2 billion for a period of this much, which will be paid at this interest rate. So commercial papers are usually unsecured. Corporate bonds may be secured. Okay. But it's usually based on cash flow and the financials of the company. So having been structured by investment banks, it can be Faida or any other, the public is able to participate by purchasing them. But having them unsecured, they might be on the risky side.
I get it.
And they'll have a higher interest rate maybe than the bank.
Okay.
So this has to first go, if at all we thought of participating in that, we have to go through the investment committee. and say, we are looking at 1, 2, 3 as commercial papers, rather than we just wake up and buy a commercial paper, and they'll vet it to say it's okay or not.
Okay.
Beyond that, I want to give you the layers. After that, now, being a new counterparty, assuming it's a commercial paper, it's a new counterparty, that one has to go through the board again now. So the investment committee will approve what the dealers committee has said.
Wow.
Then we'll go to the board and say the investment committee approved and we need to do 1, 2, 3. And the board now will write to the custodian.
Unanimaliza.
To the custodian.
Custodian is who now in this case?
Yes.
Who is a custodian?
Best question so far. Who is the custodian?
You didn't like my other questions?
I want to give people the confidence of how the fund works and the nitty-gritties of the fund. What happens is, anytime you bring money to invest in Oak, the money does not go to FIDA Investment Bank.
That's true.
FIDA Investment Bank is the fund manager. It operates, and Ian is employed by FIDA Investment Bank, but works for Oak. Oak, as a CIS or collective investment scheme, opens accounts in a bank. Those are called custody accounts. So the bank holds in trust all assets or all value, whether it is in cash, it is in bonds, it is in stocks, or any other form, is held by the bank on behalf of the clients of Oak, not on behalf of FIDA.
Okay, let me. I have deposited money from M-Pesa to the number that I was given.
Yes.
My account in Oak.
Yes.
And you're right, the message that I got back was not from FIDA Investment Bank, it was from I&M Bank.
Yes, saying you've deposited to Oak Special Fund collection account.
So you're telling me FIDA cannot say, withdraw that money and give us cash?
Yes. What happens is the custodian has instructions on which instructions to pick from FIDA. One, the first step is usually to tell them to move all the money from collection account to an investment account. From where now we give them instructions: buy this bond, buy that stock, sell the stock. Anytime they buy or sell, the money comes from the investment account to the other counterparty, and they hold that investment in trust.
Let me ask you this question. Are you telling me you don't have the, and I got this from Okinarina in Pius, money doesn't sit idle for you? So when I send that money, it doesn't chill in that current account if it is anything?
If it stays there, it reflects our inefficiency and also affects our return. So as much as possible, we'll try to either invest based on the asset allocation, or if we have idle cash, I call it idle cash, we quickly take it to a call deposit. In the meantime, before we deploy it to somewhere else, it will earn at a higher rate.
So every day you are constantly giving these instructions to your custodian bank to move. It is not you going into a computer and saying, move this. You have to give the instructions to the custodian.
Actually, we give on various ways. So part of it is through internet banking and signed agreements between now our senior management, who are signatories, and the custodians. So
the whole day, every day, you're just moving cash out. Every end of the day.
In and out, because you are buying assets and you are selling assets. So every single day there are transactions, instructions that have to come from our side through the authorized signatories to the custodian.
Hey, Ian, this is a lot, but you are demystifying it. And what happens as you demystify, we enter another rabbit hole. So I've understood this element of, you've answered then who the custodian bank is. Yes. And that's very important for me to know that you can't randomly go and, is it possible? No, and I need some transparency up in here.
Yes.
Is it possible for FIDA Investment Bank right now to go and tell INM, withdraw this money, withdraw from the 6 billion, 500 million into Faida Investment Bank's account?
I want to answer that question in a very different way, rather than say yes or no.
Okay.
Are we allowed
PC.
to do that? Are we allowed to do that? If the amount pertains to Faida and earnings of Faida, we are allowed, because Faida earns a management fee. So every month or any time, we can give a schedule of earned management fees and send to them and tell them, transfer this to Faida Investment Bank.
Who checks for them to know that that amount that you've said that you've earned is not exaggerated?
One, management fee is a fee dictated and agreed and is written in the information memorandum, which guides the custodian. The custodian is the one who's holding our assets. We are also having our register on this other side discussing of our assets. The management fee is a component of the assets under management.
I get it.
So if we say that we have earned, give or take, 5 million, on the other side independently, and we have given a schedule, they're able to see, is it 5 million or not 5 million? So even them on their side, they can verify that that is money that has been earned. So if we go and tell them, transfer 500 million to our side, and you have not earned that as management fees, they'll ask, what's the purpose of this? If something is being bought from Faida, that's something else. But if nothing is being bought, they might just say, no, why are we transferring? Because the money should be in their custody. And being in Faida, that means it's not under I&M's custody.
I get it.
So they cannot allow. However, we also send instructions for withdrawal. So when a client says they want to withdraw and they know where the money has come from, we give them instructions that this client wants to withdraw 3 million and send to their account.
So it doesn't come to your account and then to my account. If
No.
if I told you today I want to withdraw,
Yes.
it would be the Oak Special Fund INM account that
Yes.
would send the money back to my.
Yes, not to Faida.
Okay.
Not through Faida at all.
Okay.
Yes.
That was powerful, but let's continue. This is very interesting. So hold on. So we talked about all these things that we're asking. We're trying to understand, because you talked about custodian, you talked about the process of the commercial papers, but one thing I wanted to ask: do the dealers have a limitation? What if a dealer wakes up and decides to just blow that whole thing? You get, there's an opportunity, and that deal, you get. That sounds like there's too much. Are you a dealer?
I am a dealer.
You're the head dealer.
Yes, that's why I'm the CIO. What happens is, first, not all assets sit with one person. That is one.
Okay.
Two, we do what we call asset allocation. So different asset classes have different amounts of money.
Yeah.
And these ones are translated sometimes to particular accounts. That is another thing. Further than that, there is what we call dealer limits.
Okay.
So each dealer, you'll find majority of our dealers deal with three to four asset classes only. You'll find there is one person maybe who is dealing with Eurobonds, while the other one doesn't even touch Eurobonds.
I get it.
So these are dealer limits that are signed and agreed upon.
Wow.
Further to this, the accounts that may be online, everyone is allocated their own portfolio. So if you are assuming you are blowing what you have. You are not blowing what is there in the entirety. You can only access what you have. And still within what you have dealing mandates, which stipulate that you shouldn't cross here, you shouldn't cross here, you shouldn't cross here.
But Ian, let me just have this real talk. There's risk. And
Yes.
in risk, you lose and you win.
Yes.
You get, I think when we have this conversation, it's always about gaining. It's always, people always take it from the perspective of gain. Oh my God, you made a loss. what I loved, why I'm feeling so happy, is I heard you say you're targeting consistent returns every single month for the long term.
Yes.
But it means you just for fun. Are you trying to understand where I'm going with this?
Yes.
It's dealing. You win, you lose. I speak
exactly.
as a guy who's lost more than I've won in crypto. But what are your thoughts on that?
By consistency, we don't mean a flat line. We don't need a flat line. If I may look, and I would love you to look at the back of our fact sheet.
Okay.
Actually, and month-on-month performance.
Yes. Okay. Yes.
If you look at month-on-month, actually
for the year 2025,
2025, even before you go to there, look at Q1 and Q2.
Of what year?
Of 2025. We look at 2025
okay.
only.
Yes.
Q1 we had 4.66%. Q2 we had 4.88%. It looks, give or take, very flat. But if you go on the month-on-month performance for the year 2025,
yes.
January we were at 18.9, shot up to 23.05, came down in March 15.25, now went to 19.62, May 18.01, again June 19.94. It's not as flat as it seems.
Yeah.
However, we are saying that the average and not too much of deviation, as much as possible, we try and we strive to do that. But you'll find this, and that's something I've explained on our video, there's something called dilution effect. Sometimes it hits us whereby we get so much money at once, and based on the formula that we use to calculate the fund return, it reflects a lower return than we actually have for our clients, like in March. That is what happened. Okay,
we'll get into that. But what I'm hearing you, I like that you've explained about the dealers, because this feels like a lot of work.
Yeah.
And what I feel like you're explaining is that there is a guy's job who's dealing with Eurobonds. There's another guy's job who's dealing with this. There's another guy's job who's... This is not a walk in the park. Yes. This is a full-time career, and we've not even talked about the madness happening in the world.
Yes.
Ukraine, Trump, Gen Z. Don't come for me, Gen Z. I'm not you. I'm with you. No, Gen Z went for somebody because somebody said Gen Z affected the economy. But there's just all these different things that I'm trying to say that are out of your control, that are affecting, and you guys have to be sharp enough. Your job is to catch it, adapt, hedge, leverage. Hey, I'm using nice words. I'm feeling like a pro. Yes. Anyway, we're coming back to continue this conversation. Let's change some batteries.